You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report. You can find that at www.silver-investor.com. You're listening, of course, to HowStreet.com radio. Welcome back to the show, David.
It's great to be back, Jim. How are you doing today?
Well, I'm doing great, and hopefully the weather will hold for us for the long weekend for both of our nations. You had a recent trip to the Yukon to take a look at some mining property, and I'm wondering, what should you look for?
Well, a lot of people think that they might not ever have an opportunity like that, a lot of our listeners, but the reality is some of the conferences you go to do have that opportunity. And, you know, living in Vancouver especially, and certainly in places like Nevada, where there's a lot of mining activity going on, I think a lot of people don't realize that if there's a company they're interested in and it's not too far away, they can call up and say, hey, what's the chance of getting a mining tour? And they might be surprised at how that could work. So when you go there, and as you mentioned, I went up to Yukon last week and I looked at a particular property out of Whitehorse that I had actually visited in October, so this is my second trip to that property. And what you do, you know, you get out there and you don't have to be a geo, but you have to get a little bit of an idea of the lay of the land. And if you're looking, in this case, I was looking at a property that actually had been a producer some time ago, and so I went down in the mine shaft and looked around and see what was going on, and they're doing a lot of drilling and sampling down there, and I got a sense of how the rock formations were, and I toured the area, which is quite extensive. It's about 7-kilometer deposit area, and got to see the hanging wall and the foot walls where the mineralizations are. And basically speaking, the hanging wall is where the mineralization starts if it's more or less encapsulated around other rock that you're not interested in, and the foot wall would be pretty much where it ends. And of course, in a mine shaft, you can see the top and the bottom of a particular type of deposit that way in the shaft itself. You want to get a sense of how the deposit is in relationship to things around it. Is there a stream nearby that has fish in it that might be a situation that might be an issue if it goes into production? And the particular place I went had a small stream that goes by there, but you know, there's absolutely no fish in it, and it freezes solid in the winter at 45 degrees below zero. So that would not be an issue in terms of any wildlife that might be impacted. You know, although I did see an Arctic fox, and that was pretty neat. But you talk to the people, maybe the head project manager is on site, or the top geo or something like this, and they usually will walk you around or drive you around the property, and you get a sense of what it looks like, and you can kind of see with their description what they've done in the way of drilling and what they think might be there, because a lot of this is by guess and by gosh until you get a certain amount of drilling going on to kind of get a sense of what the values might be by looking at the core samples.
Wow. So do you have to have some background knowledge in mining for precious materials?
Well, you know, it helps, and I'm not a geo either, but I can speak the language reasonably well. And the thing is, with the Internet nowadays, if you want to become knowledgeable about almost any topic, it's really easy to get on there. You could go to a website that has mining terminology on it, and you can look up the main terms so that you know what is going on, the difference between an adit and a stope, for example, and the different types of mineralizations. When they talk about a VMS, you know, or an anomaly, you know what that means. And so it's not that difficult. And I would say if you come up with, say, 10 or 20 terms that you understand what they mean and can kind of walk the talk a little bit, you're really reasonably knowledgeable about what you might run into in some of these deposits, whether it's just a drilling operation where they're looking for a deposit, or whether there's actually a mine and a mill in process of taking the ore and turning it into metal.
Yeah, I was going to say, investing in mines, at least you can go and take a look at a site and go underground, or if it's an open pit operation, look at it. You can't do that with oil.
No, you know, and the nice thing about the resource sector is that these people are really approachable, and you can get a lot of information at conferences as well, too, so you don't actually have to walk the mine site, but I would say that anybody has an opportunity to do it, they really should look into it. And I visited many mines and properties over the last X number of years, you know, in Canada and Mexico and South America and occasionally in Asia. And I found almost all the time the people that I speak with are very safety conscious. If you're going to go down into a mine, you know, that you have to put on the gear. You got the your boots and your helmet and light, and sometimes if you're going down, like I've been down at sometimes 2,000 or 3,000 feet underground, they even give you an oxygen supply unit that would keep you going for a few hours if there should be a rock fall or something. But by and large, it's pretty safe if you pay attention to what's going on and you make sure that you stick with the group and don't do a dog walk down a shaft someplace that they didn't really want you to walk because it would be unsafe.
Yeah, when I was a kid in Grande Cache, Alberta, when they opened the coal mine, they had tours. When they say as dark as a coal mine, they really mean it. We turned off all the lights, and, I've never been in a mine since. It was so scary.
Well, the coal mines are, they have another issue too. Sometimes if there's mining going on, there can be coal dust in there, which can be explosive. And occasionally in some of the mines that aren't really well maintained, they'll leave a kind of a pillar to kind of support the ceiling. And that pillar might be basically a coal seam with some rock in it. And if that gives way, that could be a big problem too. So I actually feel much safer going into a hard rock mine looking at these epithermal vein deposits of silver or something along that line than I would in a coal mine. And I've only been in 1 or 2 coal mines, and that was back east. But I don't miss that experience, frankly.
Yeah, so now that you've taken a look at a property and had that opportunity, what can you do with that information, and how could it influence your investment?
Well, you can see how serious what's going on there is, and when you listen to the other people speaking, sometimes there'll be analysts maybe on that same trip with you, or if they're trying to raise money or something, there might be someone from one of the large commodity houses there, and they're usually pretty knowledgeable. You can listen to the questions they ask, and you can see how yours are answered and how knowledgeable people seem to be, and put it all together, and then go back and look at their website and get a sense of, maybe I would be interested in this company or maybe not. And, everybody wants to put the best face on what they're doing, but if you just pay attention, you can learn a lot just by listening.
And of course, you want to avoid a disaster like Bre-X turned out to be, where they had perhaps salted the assays.
Yeah, and that was just amazing. That was, as you know, that was such a big deal. It almost brought down the exchange, and it kind of turned people off on the idea of mining investments for almost a generation. So I'm sure that if a few more people had actually hit the ground there and looked around and did some kicking the rocks, so to speak, maybe that wouldn't have happened. Maybe there would have been more doubting Thomases out there rather than people kind of accepting it as truth when, as we know now in retrospect, it was anything but.
Would you have more confidence after seeing a site or not? Or do you think that you still have to use your basic investment instinct?
Well, yeah, I think you really can. And here's an example I'll give you. A few years ago, I went to a site in Idaho, and they had a very large area that they were drilling in, and they were showing the values of the gold that they were finding in the drill holes, and most of these were fractional ounces, and I'm talking 1 or 2/10 of an ounce, 1 or 2/10 of a gram per ton. And that's pretty low value, and I know that you can make money if you've got that sort of thing going on, but usually you need some higher values too. And I looked at a lot of the drill samples that they had, the records that they had, and I noticed that there were very, very few values that were, let's say, 1 or 2, grams per ton. It was these fractional ones. And I realized that if they had a massive open pit operation at some point, that maybe they could make money, but it was going to take a long time to put together. They were going to have to move a lot of earth. And frankly, that factor alone convinced me that I wasn't really interested in that project. So you want to see some reasonably high values in what they found to have confidence that, well, yeah, maybe this will be profitable, rather than have to move half of the Earth's surface, to get a few hundred or a few thousand ounces of gold.
And of course, nowadays, when you do open pit mining, you have to restore that site when you're done. So, the cost continues after you're finished making money on it.
That is correct. And I can't say that all jurisdictions are this way, but I know that many are, certainly in North America, and I believe pretty much throughout South America as well, too. Part of your business plan has to show what you're going to do to restore the property and put it back pretty close to its original state, and that's part of the legacy cost of running the mine. So, and sometimes even a deposit is required on the part of the jurisdiction that you're in. So the old days are not operating like that anymore nowadays, and that's part of the cost of that you have to factor in with the mine, and that's one of the reasons that costs keep going up, because all of the attendant expenses keep rising to the point where now I believe the average cost of getting an ounce of gold out of the ground, the all-in cost, Well, the cost of getting it out of the ground is around $1,000 an ounce for many of these companies, and the all-in cost, counting the legacy cost that you mentioned and everything else involved, can be $1,500 per ounce, which is essentially where gold is today. So a lot of these companies are barely profitable even with these record high prices.
My guest has been David Smith, the senior analyst for the Morgan Report, which you can find at www.silver-investor.com. You're listening to HoweStreet.com radio, and you can get a hold of us at info@HoweStreet.com. I'm Jim Goddard.